there is no magic pill, but there's no magic pill in business or in life. So, everything requires risk, everything requires investment, and you have to pick a strategy as a CEO. You have to pick a strategy and you have to go all in.
DNA's first webinar of 2024. Could we still say Happy New Year, Tim? Is it too late for that?
Happy New Year, Jason.
I was told after like the 7th or 9th, it's just not acceptable anymore. But today's webinar is one that we look forward to. Tim, I think you and I have been doing the first webinar of the year for the past few years now, doing a recap of the year before, talking about predictions, projections for the upcoming year, and the way things wrapped up in 2023 and how they're presenting themselves for 2024. I know I'm sure excited.
I couldn't be more excited. Thank you for having me.
Of course, we feature a different team member each month. Tim hops in throughout the year, but at the beginning of the year, this one's extra special. Tim and I, of course, founded DNA back in 2014. Got immersed into the world of investment crowdfunding, equity crowdfunding around 2015. And it's just been picking up from there. So yes, honored to have our COO Tim on here today. As always, we have created a deck, which I will pull up on the screen now. And this document is available to any participants, anyone who is watching. You can reach out for this. I'm told not to say that, so we don't have people log off when I mention it, but nothing's behind the curtain here. So we're going to get into all the stats. Tim, do you want to familiarize the audience with your background before we dive into things?
Absolutely. I like to say I'm a lifelong entrepreneur. I was the kid with the lemonade stand. That's my story, and I'm sticking to it. I love entrepreneurship, love building businesses, loving working with founders and bright young talent that have a dream and want to make that dream happen. And it's not always the young folks. I mean, as I get older, naturally, I start to work with older entrepreneurs that are now starting to look at the exits and starting to sunset. But it's been an amazing journey over 25 years plus of building businesses, from having a t-shirt company in the garage to having DNA and having great partners like you, Jason. And it's been a wild ride. It's a dream. The one thing that I know for a fact, the one certainty that I know in business is that every business needs capital to operate. Whether they're raising capital, bootstrapping it, using credit cards, working 5 jobs to make it happen, businesses need capital to operate. So I think what we do here at DNA is a bit of a dream of ours as well, to be able to help others get the capital they need so they can build healthy organizations, healthy communities, healthy families, healthy economies, contribute to the world in a more meaningful and positive way. And we get to play our little small part in that as an agency to help people amplify their voice and get the capital they need. So always excited to be part of the journey and the ride with anyone that's brave enough to roll the dice for their own business.
Absolutely. Well said. And I know that's why we focus on this space. We had started with a variety of growth marketing campaigns, found fundraising to be that common theme, that common initiative. As Tim was saying there, businesses fail without capital. The success rates of startups are not great, and this is a very effective place for us to focus our efforts towards their larger journey, their success milestones. I host the Test Optimize Scale podcast. That's our philosophy towards marketing. You'll see it up in the top right hand corner here. Definitely want to check out some of those episodes with some of the top voices, names in this space. And the other note on DNA is we've worked with over 400 investment crowdfunding campaigns that have collectively produced 9 figures of capital. Many of the top campaigns of 2023. That's directly what we're referencing here. It's in the background. You hear Tim's focuses, what he wakes up in the morning to do, and the impact he's looking to have in the world, what we're looking to do here at DNA. That's where these stats come from. Our disclaimer. I'm actually supposed to turn up the volume here, our general counsel said, but we are not security attorneys. The following is our thoughts. Following are our thoughts. Please always run everything by compliance. Can't say that loud enough. You want them to be part of the conversation. And we wanted to start out the discussion. I was recently brought onto the Crowdfunding Professionals Association board, and they've said, hey, it's no longer equity crowdfunding, it's registered investment crowdfunding. So we're going to do a recap of 2023 in registered investment crowdfunding. I think we have a slide here on the full year, but just Tim, as we get into the world of registered investment crowdfunding, what would be your take on 2023 as a whole, coming out of 2022? You know,
Yeah, yeah. Um,
traditional markets, VC.
yeah, I mean, we're going to get more into stats, so I'll really just talk sentiment. The
Yes.
sentiment of 2023 was a slow year across the board. You know, entrepreneurs are always an eager bunch, and everyone's, I love that about entrepreneurs and, kind of let it rip. But there is sometimes a tide that slows things down a tad, whether it's rising interest rates, whether it's the sentiment around cryptocurrencies, whether it's just less disposable income because of inflation, you name it. But the sentiment was down. Things were slower as an agency. We saw less raises, which we'll talk about, across the regulated investment crowdfund industry. Housing purchases were down. We saw just across the board that there was a slowdown. I think what happened was post-COVID we're still kind of riding the high, and then we knew things were going to course correct a tad, and I think 2023 was that year where we started feeling the course correct. I will say, and we were having a conversation just before this, we're 2-3 weeks into January, and I haven't felt this type of momentum for at least 2 years. The conversations I'm having right now, people are very encouraged, very motivated. Now, maybe it could just be the January highs, but right now people are very, very motivated that we're talking to. We're talking to tons of startups, talking to a lot of legacy style businesses on different sides of the table, but sentiment does seem to be up right now. So that's encouraging.
Absolutely. And among what everyone felt in 2023, as the sentiment, as you're mentioning, Tim, Reg CF stayed pretty stable. 423 million in 2022 was raised. Now, there were higher projections for what 22 was going to bring, and we talked about that in 2022. 2021 was a anomaly, and high year at that. So I saw projections of a billion. So this isn't anything to necessarily celebrate. It's just the what so. It's just looking at the numbers. 423 million produced in 2022, 420 million produced in 2023, 0.7% down. Actually going to pull up a graph from private equity, and fair warning, it's drastically different. We're big fans of private equity. This is a function of private equity, but just talking about contrast, 1.7 billion cumulative Reg CF funding since 2018. Debt and revenue share securities are only 8% of that. The rest is equity safes and convertible notes, 92%, but all under investment crowdfunding. That's why we want to call it investment, not equity, and show register to actually show the legitimacy and validation around these type of deals. In many senses, it's been a hurry up and wait. We've would have liked to see more traction sooner. Although billion sounds like a lot, it's a small piece of the economy. So we only picture it rising and rising and rising from here. Tim, you want to talk about the top platforms?
Sure. Yeah. So it's quite a bit of funding portals, as we call them, platforms, funding portals. But really what we see time and time again is a few main characters that keep showing up again and again. So we have WeFunder leading the charge, Start Engine following that, Dealmaker, and then Republic subsequently. Now, there are roughly, Jason, you probably know the number offhand because it changes, but maybe 90 or so?
Yes.
Yeah. Yeah. So these are the top 4 out of that 90.
Exactly. And 59% of the Reg CFs That's not actually correct. 59% of the investments took place on Start Engine and WeFunder. We pull this data from King's Crowd, from other sources online. Definitely point them out as an authority in the space to be able to pull analytics. Dealmaker, of course, provides software to issuers that allows them to launch campaigns on their own site versus being listed on a website with 50 other deals on the Start Engine, 190 other deals on WeFunder. Republic was working on less deals at a time last year, but a high effectiveness, a very effective level on those campaigns. And those numbers are somewhat accurate with around 190 campaigns on WeFunder, around 50 on
Yeah,
Start Engine.
and one caveat is that it doesn't mean one portal is better than another. That is
Correct.
the question we get asked constantly, who's the best? It really comes down to what your goals, your objectives are. There's a series of factors. So if you want to have a more in-depth conversation about that, just let's talk.
Yes. And I could tell you pros and cons of each of the platforms for each of the verticals based on firsthand founder reviews. I try to base things on the analytics purely. Every Monday, we look at the report from Reg CF campaigns from the Saturday to Saturday before. Any given Monday, any one of these platforms can lead the charge. The number 3 spot changes up. Net Capital was on that number 3 spot more and more last year. Other platforms we see more and more regularly. Issuance has a strong Reg CF platform now. Dowmore has a strong Reg CF platform now. They do a lot more in Regulation A. We're going to talk about Reg A for 2023 a little bit here too. Don't want to paint too many rainbows around that. But at the same time, we're seeing more groups enter the Reg CF space. Now, we tracked 1,434 companies that raised a Reg CF in 2023. 314 of those companies, 21%, did not reach the minimum goal. Now, the minimum goal is set in your filing. Some groups set it very low. Other groups set it, 100K, few 100K. Really should be filing this at a place that you know you're going to hit. But the minimum goal is not reached 20% of the time. The other 80, the 1,150% hit that goal. I want to point out 1,434 is nothing. We're talking about millions of startups in the US. Don't have the exact stat, but I want to say it's something like 1 million filed in 2023. Only 1,434 launched Reg CF campaigns. So although you may think everyone knows about Reg CF, they do not. Although you may think that this is a well-used vehicle in the industry, it by the numbers is not. I think it's a big opportunity for everybody operating in the space, whether you're a service provider or a platform, and looking at the growth that's going to occur in the next 5 to 10 years, whether you're a founder launching one of these campaigns and understanding that you are at the forefront. Your campaign may be studied in an investment crowdfunding history book or whatever the kids are researching on at some point. We are really carving the trail here. And at that, investors, they're literally participating in deals now that could be the next IPOs, the next unicorns, and part of those success stories that are really going to bring the mainstream adoption. So the average raise last year, this is not a median, but the average is 366,000, taking in the lowest raised and the highest raised. I could tell you 50% of campaigns don't go above $73,000. So it's not saying this is the most commonly seen number as much as averaging the amounts. And the average length is 4 months. I actually recommend longer term campaigns and speak to platforms that recommend shorter ones about that. I do recommend seeing some traction and then continuing. Tim, let's make some contrast to the offline capital raising world.
Sure.
How many companies are raising this much, successfully? How would you size up these amounts if a
Yeah.
company,
So,
offline asked?
well, there's one big distinction that I like to make, which is the approach towards raising capital. Um, because this is where every startup kind of gets hung up. It's like, we're going to start a business. We think we need 500,000 to 1 million. It's pretty fair ask. Uh, Maybe we're first-time founders. Maybe we've had a business before, but we're not deeply connected to the VC space or have angels or rich uncles and all that stuff. So what are we going to do? We only have a handful of options. On the lowest end, it's bootstrapping it, trying to apply for any kind of local grants or get whatever we can. On the far end is having a VC knock on our door and say, here's a check for 2 million, right? Now, you can go the traditional route where you hire a registered investment banker that is going to write your business plan, do your pitch deck, and charge you X amount of time to go out there and shop your deal. They're going to spend 3 to 6 months and make as many introductions as they can to angel investors. You're going to work the angel networks like Kuretsu. You're going to pitch anywhere and everywhere you can. You're going to do the dog and pony show. You're going to have 1,000 demos and reviews of your pitch deck. It's a lot of time, a lot of effort, a lot of energy that gets out there. And in many cases, you can kind of still end up at zero. You can still go through that whole process of 6 months, spend a lot of time, money, effort, and energy, and kind of end up at zero. Now, for early stage companies, most are generally going after the $1 million mark. And if you're raising it from private sources, high net worth individuals, you're generally going to pick up a handful of checks. It's probably going to be syndicated to get you 2 million. So maybe 5 or 6 checks gets you there. But that's if you're working the process appropriately. What I like about equity crowdfunding, registered investment crowdfunding, and this approach is in that 4 months, you're going to create content. You're going to drive thousands of investors to your offering page. You're going to control the terms. You're going to control the narrative. You're bringing people into you. You're pulling them in versus going outwards and spending all this time reaching out. And at the end of it, if you have a strong marketing campaign, you're working with a great marketing partner and you have good algorithm working for you, it not only is going to generate raising capital, but it's going to serve as an asset for any subsequent raises from that point forward. So that is one big distinction of the process of how people have been raising capital when I first got into it 20 years ago versus the beautiful tool that we now have through Reg CF that allows us to market these offerings out to retail investors and accredited, depending on how you want to go about it. But we can just start talking about our deal and bringing people in on very low minimums. So people can invest as little as $100, whatever you want to set it at your campaign. Whereas previously, we wouldn't accept a check for less than $50,000 to $100,000, right? In a Reg D environment and so on and so forth. But Reg CF just kind of opens up so many more doors out there. So it's a really awesome tool. And I would say that's kind of like the big distinction for how we used to do it versus how we're doing it now.
Yeah. As you mentioned, the amount of companies that hit zero too. I've heard crazy stats around that. I mean, it's misleading to, focus on the groups doing their D round, E round, and going public, and this check to that check. There's stats on the funds, the VCs that are actually participating in these deals, the angel investors, and it's a small percentage of deals that get funded at these levels. Like you said, the rich uncle, first degree network, some angels, maybe it's an angel network. But I've met so many of those groups that do not receive a dollar. So to see 366K as the average, I would say is not bad. I also
Yeah.
wanted to dispel any rumors. We talk to groups every day. We're on the phone with dozens of companies every week, I think every day for the most part. And even looking at that 1,434, we probably spoke to more than half of those guys firsthand. Worked well over 100 on their campaigns. Well, beyond that, everyone thinks they're going to raise $5 million in 2 to 3 months, or 1.235 before they have to do another audit in 2 to 3 months. You think we should do this in 2 months or 3, Jason? And how should we budget for it? When I have to point at the stats and show that is not as common. So it is more of that 366 average that is still good, incorporating the retail investors. There's so many marketing benefits, as Tim said, and just want to echo. I mean, you're proactive in this this model. You're posting content regularly. That's hopefully part of a larger content calendar with a narrative that's constantly showcasing momentum. You're driving traffic with ads. Just the marketing benefits have outweighed the capital for some of our clients that did a full raise, and they got franchise partners. We've seen mergers and acquisitions take place. Kingscrowd actually tracks that as well too. Here are some of the quarterly investments, and you could see comparatively 2022 to 2023. 2022, as we know, had different events occur early in the year that affected later parts of the year. For traditional markets, 2023, that continued as well. Everything from war to stock market crashes to mortgage rates, politics, interest rates, excuse me, politics, across the board, cryptocurrency crashes, alternative investments really took a hit. Some verticals that were huge at the beginning of 2022 and coming off the heels of 2021 were really affected. So while we were seeing, 120 million, a bit over in early 2022 quarters, weren't back to those numbers till 2023. And quarter two was the strongest, quarter three not far behind, quarter four right there, and even through the holidays, which was promising. It was very exciting to see. As Tim was mentioning, the average investment offline, 50K, 100K. We still see that on our Regulation D campaigns. I've actually worked on some, Boxbull, we had a $10,000 minimum. Other campaigns, 25. We find the larger investors still want to have a larger stack of chips on the table, and we'll put in larger amounts. Meanwhile, you're able to get some of the smaller investments in from accredited investors on those Reg Ds. With the Reg C focus of today's conversation, we saw the average investment go up from more of that $500,000 level to $1,190. I think a lot of that is Dealmaker and some of those platforms that carry a higher average investment, 2,000, 3,000 higher. I still use the number of 1,000 for easy math. So if you get 50,000 visitors, 1,000 investments, if 1,000 investments are at $1,000 average each, that's $1 million. It provides the perspective of $1 million per 50,000 visitors. Don't think you're going to get it off 100 or 1,000, and 408 investors per successful raise. Again, looking at the averages, if you want to be at a higher amount, you're going to want to figure out the math correctly. Tim, what type of strength in numbers do you see from this model?
Yeah, I mean, my brain goes to a lot of places. When I look at that 408, I think this 408 is now your tribe. These are potentially future investors. These are folks that in many cases want to come back for more when your company starts winning and hitting milestones. That 408, they know another 408 people. I mean, you could in theory say everyone is good for 2 or 3 introductions, so that starts to expand. People have friends. We always talk about the Thanksgiving dinner table. They're sitting around, and I just invested in this golf tool, and me and my family, we like to golf, and everyone wants to know about what I'm investing in. It's really easy for me to pull up my phone, and they could just start making $200-$300 investments right there. So that kind of network effect really does play into Reg CFs. And we're not talking 10, 20, $50,000 checks here. We're talking $200-$300 checks, and the average investment being $1,000. Still not that much. And it's still not the kind of in most homes, it's not the kind of investment that husband and wife need to sit down and pencil out and plan and map out. I mean, in many cases, a $300-$400 investment, people are blowing that at Starbucks.
408 people. That's a huge wedding. That's a lot of people in a physical room. And you think of the power of those individuals. Tim saying one-to-one, peer-to-peer. I hear about things my brother invests in all the time. Many of the first projects, and just retail. My brother's not Warren Buffett or anything like that, but that's not any different than anyone else in the U.S. I would believe. Tim and I go out to the golf course later this week. probably get paired up with people, or if we start bringing up retail investments, they'll have some knowledge, some little ideas to share. And if they say something like, hey, I just invested in this AI company, I just invested in this space company, there's this whatever we're looking at. We worked on tunnel boring companies last year, we worked on graphene companies, we've worked on all different types of alternative energy projects, you name it. Any of those shareholders are at that Thanksgiving dinner table, the dinner table. They're at the golf tee box. They're anywhere at the local pub, the local dive bar. They're hanging out with their family, their friends, their coworkers. It's something that's brought up. I am a shareholder. I'm a partner, perhaps, in this organization, and that's a strong marketing tool. It's 408 ambassadors that you're bringing on, not influencers that you have to pay a few hundred thousand, a few hundred to a few thousand, maybe a few $100,000 per post each. These can be your social army talking about your product, whether it's B2B, B2C, you know strictly government contracts. We have a data sharing client, government contracts, thousands and thousands and thousands of investors. They participate from one round to the next. They're not satisfied with their position from just one. This is perhaps more valuable than the capital.
Yeah, and there's a important caveat, which is, when you're making these low types of investments, and again, you're going to want to talk with your attorney about and all that kind of stuff. There are disclaimers, but you're just not getting the drill down like a professional, seasoned, high net worth investor might drill down on every nook and cranny of your business model. A lot of times what we see with the retail investors is there's this momentum, there's this energy, there's this excitement, and they just want to come along for the ride. So we always talk about the crowd, right? So if you've been a fan of, let's say, a certain product, I know you snowboard, Jason, if you've been a fan of a certain snowboard product, and all of a sudden they came out to their 50,000 followers on Instagram and say, hey, we're doing a crowdfund to fund some new projects. You're like, yeah, of course, right? You're not thinking about really their org chart. You're not thinking about their revenue project. I mean, you might be thinking about some of those things, but the most average retail investments are kind of making these emotional investments. So that's good and bad, right? I mean, you always want to be very educated on what you're investing to and all that kind of stuff, but it's more of this momentum and this energy that brings people in, because it's easy to make the investment. It's easy for them to buy a $200-$300 share, and it's fun. It's fun.
Absolutely. Absolutely. You're not putting $200 in, frankly, $1,100 in, and expecting to retire off of it.
Right. I mean, if you're making a
Yeah.
$200,000 investment, $2 million investment, stakes are higher, right? $20
Yes.
million investment, VC, stakes are much higher. Right? You're gonna be
Yes.
looking at a whole series of things. Making a $200 investment, in many cases, it's because you believe in the company, you're excited about what they're doing, you just want to participate and get involved.
Absolutely. Absolutely. I learned that early on, talking to actually some of the lawyers in the space, some of the groups work on the financial audits. And from surveys of retail investors, it was the experience, that word that kept coming up in terms of why they participated. They wanted to own shares in that snowboard company.
Right.
They wanted to own shares in that genetics company, and they kept seeing genetic testing online, and a good opportunity came up, or whatever it may be. Someone who has evolution in real estate, and everyone understands the opportunities in real estate. They want to be connected to this. There is the VC model, in the sense that if you put $1,000 into 10 companies, $10,000, and one of them hits over 5 to 10 years, and again, this isn't financial advice, let's say they go from a $10 million valuation. A lot of the early stage companies for around that $10 million valuation. The average actually is much higher, balancing out 9-figure valuations. Say it's a $10 million company, and that company becomes a billionaire.
And it's all part of a balanced portfolio, right? We're not saying this is 100% of all your investments. I mean, have a head on your shoulders, be smart, make calculated moves,
Yeah.
have some in risk, have some in, stable.
There's those stories of Facebook and all these other platforms, and if you in this year, this is where it would be, seeing it go from 10 million to 10 billion, you're going to see a massive jump. So just going back to the slide deck here and talking about some of the statistics, some of what we're seeing in the space. I had mentioned 11 companies. 11 companies have hit the $5 million limit in 2023. That's 0.76%. 99.24% did not. I had far more than 11 companies tell me that they wanted to reach 5 million last year. There are some exceptions to this. We worked on Atom Beam that did a $3 million round. Start Engine that completed in July and another 2 million in December. Worked on Avadane, which sold out at 4.5 million and had a long list of people wanting to get in above that, and then plenty of other issuers that are in situations like that, but physically tracked on one campaign on King's Crowd, $5 million. Only 107 hit 1 million. So of the 1,434, 7.46% reached $1 million or more. I generally see a sense of shock when I share this with the founder and issuer. We do not share these stats to scare anyone away as much as to have them equip themselves appropriately for marketing, because that is the difference, right? Is how you're marketing the shares, how you're marketing to investors. So more is more. Do more. And if you study those 107 companies, you're going to look at a lot of traffic. A lot of it was produced from ads, some of it from financial email newsletters. Can't guarantee that they're going to write about you. You're going to see a lot of content published talking about new partnerships, new deals, new milestones, new revenue that was accomplished during the campaign itself. So again, I see these stats and think, hey, there's so much good stuff going on here. So I want to paint, both sides of it. But Tim, you speak with a lot of these issuers, a lot of these founders. What do you think they're asking themselves right now when looking at these stats, and how do we want to guide that narrative?
Yeah. So I think there's two groups and two questions people are probably asking or conversations are having. One is, what is it that I need to do to be on the winning side? What is it that I need to do as a CEO, as an organization, to be among the 107 or among the 11? And then you have another group of people that say, this is going to be too complicated. It's never going to work for me. We don't have the money. I don't like it. It's a sham, all that kind of stuff. And they're going to be in those big gray and big black boxes. This is not easy. This is absolutely not easy. There is no magic pill, but there's no magic pill in business or in life. So, everything requires risk. Everything requires investment. And you have to pick a strategy as a CEO. You have to pick a strategy and you have to go all in. You can't, be 1 foot in, 1 foot out. If you're going to go in, as Jason said, more is more, be prepared. Just plan. Don't just jump into this. I mean, I can't tell you how many conversations we have with someone who says, yeah, we want to raise 5 million. We say, great. When do you want to raise it? Well, we're going to launch next week. Okay. Do you have a plan in place? Nope. Do you have any audience? Nope. Do you have any friends and family? Nope. So, what do you expect? All right. So it's like, this is just the first big hurdle that you're going to experience in your business, right? Your business is going to be chock full of major hurdles, and it's never going to get easier. It's just the nature of business, the nature of entrepreneurship. So this is where you really get to show up, your first major attempt of bringing something over the line. This is where you get to show up and show out and prove what kind of CEO you are and how serious you are about hitting your business objectives. And guess what? You're going to be showing your investors how stable you are, how consistent you are, how professional you are, how committed you are, how dedicated you are. That's what you're going to be showing your investors, right? Versus, showing your investors, we tried it for 2 weeks, didn't work, and then we're out. So who would you rather invest in? Would you rather invest in the guy that did all the research, or gal that did all the research and hired an expert team and really just rolled it? Are there any guarantees? Nope, there's no guarantees. We'll be the first one to tell you. But I can guarantee you this, if you don't show up and commit fully, like, you're going to be amongst the majority that don't race.
And I just love what you said of, don't be 1 foot in. I speak to too many founders that think they're going to test it out for a month, maybe two. If the returns aren't there, they're going to stop. Statistically, you're going to fail. And I would rather push people away. I would rather the founders that Tim's talking about that, are just not going to be able to continue striving through this, not use the vehicle. I think that's just one more person pointing at something and saying it didn't work. I launched a campaign on a platform, didn't get any investors. And it's just a misuse of the tool. So that's what we look to point out here, and in a productive way. This is a stat. This page is full of stats that we showcased actually with our sales reps of Danny Shapori and David Barbara in the July webinar. And at that time, there was over 6,165 Reg CF campaigns. There are over 6,800 today, and 50% of them documented had not raised more than $75,000. You could see each step along the way. 80% did not raise more than $304,000. Even though we see that average at 366, again, it's averaging the amounts, not the campaigns. The top 10%, 647K. Did the math a few weeks ago. It was about 643K decimal in there as well. So it's not like it's radically different since July, and slightly lower at that. 420 of the 6165 surpassed 1 million. Similar to what we're seeing. 10% would be, 616, 420. I mean, we're talking about the same percentages, that same 7.46% that we saw in 2023. You could see only 113 did 2 million, only 100 did 2.19 million. These numbers have slightly increased. 41 over 4 million. As of July, there was only 35 that did the full 5 million. So I only doing this to dispel any misconceptions as mentioned. And as Tim said, prepare the right founders for the right steps so they're at the preferred parts of this pyramid. I think the same can be said of life, of entrepreneurship, of startups, of marketing campaigns. I don't want you to think, hey, this is a bum vehicle, as much as what are those top groups doing, as Tim mentioned? How can we be doing those same things? Tim, some great stats in here. I really love how, and there's another one for it. 90 million was from women founded businesses, over 21% of the total, and 118 million from minority founded businesses, because it's a big part of why this vehicle was created, to give access to capital to early stage founders, even founders in growth stages, but just who don't have a Rolodex of investors that they could contact perhaps. And also, these are not the percentages that you see when you look at deals funded at the VC level. It's typically not these percentages. It's unfortunate, and we're seeing these numbers grow, which I think is a great thing.
Yeah. I also read a stat, and I haven't verified this, but it's from the Wall Street Journal this morning. It says Black Americans are the fastest growing group of stock buyers. Nearly 40% own stock in 2022. Again, I'm just reading that on an Instagram post today, but I saw that along the same lines of that statistic. So I say, when it comes to these crowdfund campaigns, because it's marketing, right? It's all about marketing. Anything you can do to build your story, use it. Use your unfair advantage. If you have an unfair advantage, lean into it, because it's all about your story, who you are, your narrative, how you grew up, what your background is, the circumstances that you have. And again, it's not always like rags to riches stories. It's just the more we know about you as a founder, the more we know about you as a CEO, the more we can relate. So I'm a Mexican American. If I saw another founder that was Mexican American doing something in an industry that I was into and cared about, I'd say, oh, that's interesting. This guy's doing a crowd. You know, it's just I have one extra layer of connection to this individual, right? Now, if that guy says, well, hey, I grew up in the 90s as a DJ. Well, now I have two layers of connection. He's like, yeah, I worked as a management consultant for 20 years. Well, now I have three layers of, and the more this person tells me, the more connections I can make with this person. Like, hey, I feel like I know this guy, right? I would love to invest in this person's company versus what we always do is just put the product front and center. Hey, here's a cup, and it works with an app, and you can just warm it up anytime you want. It's like, that's cool. But what about the guy behind it that built it? Why did this cup come into existence? So when I look at those stats about the female founders, the minority founders, it's like that to me is more of a story. Give us the story. Lean into that story, right? Because it's the norm. It's the minority. So we all like a good story. Tell us. And if you're not leaning into those stories, I mean, I get it. I don't always want to be like, oh, Mexican. I get it, right? You kind of want to have your own merits, but if there's a story to be told, tell the story. It's marketing.
And regardless of what your story is, people want to feel like they know you. You're going to be responsible for their money and making it grow based on the growth of the company and the cost of the cost of their shares. So I think it's such a powerful vehicle because you can create an offering page with the video that simulates what a sit down would be with you. What would you tell them over lunch? That personal effect should be there. The top ads we ran last year, a lot of them were selfie videos. And we had production, video production videos. We had graphics. We had animated graphics. We had all this stuff running. Just low production, lo-fi selfie video that felt like, hey, it's me sending a video to Tim about a story that day or breakthrough. And instead of, calling it, hey, I'm just doing this 1-minute video, I wanted to tell you this. It should have that very one-to-one feel towards it. And I think that's what's present on a lot of these campaigns. And again, founder, access to capital, investor, access to early stage deal flow that has the potential for high growth.
And again, telling your story doesn't have to do anything about being a minority.
Correct.
Minority, cool, but always tell your story.
Yes.
As a founder, the founding team, like always tell your story.
These are just great examples. And if you look into the stats elsewhere, you'll realize why they're so great. They're literally 10 times stronger than more traditional routes. Regulation A, 225 million raised total, half of Reg CF, and down from 391 in 2022. So a lot of times we look, there'll be 80 or so live Reg A campaigns. They stay live for much longer when we're looking at the analytics. And a lot of them are pretty stagnant. This is where the big boys come to play. You can raise up to $75 million per year. More and more organizations are using the vehicle. It's a big talk in the micro cap publicly traded community for Reg A's that can be run. Groups run it before their IPO. Groups run it that are private and want to take on these large rounds, or have their consumer base become investors, but at a strong volume. But not seeing the same traction over there. Even seeing a lot of the groups running the top Reg A's moving down to Reg CF filings, which could be present there. This is the slide I was mentioning about private equity. And Tim was sharing the sentiment of 2023, 2021, monster year. Everything's happening in the economy. A lot of extra resources everywhere. Activity. 2022, 2023. This is the aggregate transaction value of private equity and venture capital entries worldwide since 2019. The blue represents the aggregate transactional value year to date and rest of the year. Number of deals you can see as well had dropped. So, not an expert where I can tell you all the inner working pieces of why and where, but just trying to look at, the 10,000 foot up view that less deals, less being raised from other access points equates to more deals and stable levels in Reg CF. And Tim, this is consistent with what you're saying, what you're seeing.
Yeah,
Yeah.
there was a question here about all we can really do is speculate as to why Reg A flow deal is down. Um, when you look at these numbers and look at the sentiment, I think it's natural that the CF industry and Reg A industry is down, but I would say this, that all industries need success in order for them to grow. And when success is slow, it doesn't help the sentiment. It doesn't help investors want to come into these types of deals. It doesn't help issuers want to rush in to do Reg A's, if you will. For example, if that number was double the following year, I would, again, we're just projecting here that we'd see another increase in the Reg A. So I feel like the jury's still out on Reg A's. It's a different algorithm. It's a different approach. It requires a longer period of time. It requires much more significant investment, different strategies. So I feel like until we start seeing some major case studies out of the Reg A space, I feel like it's going to be a slow roll. That's my projection. That's my prediction on Reg A's.
It's a much more in-depth filing. That's very costly, although those costs have come down over the past 5 years. And I think I actually see less marketing there from many issuers that want to launch and think some larger institutional groups will come pick up large amounts of their shares and close out their round quicker. If I look at all of the Regulation A campaigns on King's Crowd, I see 344, and that's to date. The top 100 raised 3.4 million or more, which a lot of these are looking to do far more. I mean, for Reg CF, you could do up to $5 million. So to think that only percentage of those, perhaps 20%, surpass the $5 million mark, kind of shows, hey, we could be doing a Reg CF filing for far less money. Could do a side-by-side Reg D along with it. Many of these are hosted on the issuer's site, their own portals, and the issuer's 100% responsible for the traffic. So marketing's a big component, a big play here. But I think just less went live last year would be the biggest contributor towards it. Now, as we get into the final 10 minutes here, what trends should we expect in 2024? At the end of 2023, the Federal Reserve hinted it would start cutting interest rates. Projections from the Fed's December meeting forecast the federal funds rate to fall to 4.6%. It's a big deal here in California. And that's down from the current target range of 5.25 to 5.5. Everyone is talking about this. When this is in the news, we see the impact it has on the traditional markets and are anticipating similar events for the public-private markets.
I think you froze on us there, Jason. I could take over this slide until Jason comes back here. But yeah, so one of the other predictions that we have here projections, if you will, for 2024 is more investor opportunities, meaning the more issuers that enter the space, the more opportunities there are for investors to get involved. We hear murmurings of regulatory flexibility in the Reg CF space. So we're hoping that, that also brings in more issuers. More issuers in the space is a bonus. So the more that we get into this, oh, that's my side. Jason, you want to take over the share on that?
Sure. But yeah, the more we take over the space, the more we'll see happening within the space. Meaning, we're working with celebrities, athletes to promote these deals, larger financial publications, just more going on in general. That number of investors, that number of issuers, we expect to jump dramatically. Would love to see over 2,000 issuers this year, bringing their own existing audiences, getting media coverage, and getting more and more and more mainstream at that. I picture Tonight Show guests talking about it, or take your pick of any of your favorite media shows or large shows. I know when I was a little kid, that's what would be talked about. Whatever is it for you today. Crowdfund Insider, one of the authorities in the space, has a great perspective here. All tech companies we think will continue to outperform other industries. AI, robotics, clean tech, and space tech all seem to have a lot of momentum from 2023 to carry over into 2024. We also predict an increase in consumer packaged good companies that have established communities and/or are considered influencer brands, leveraging this type of raising opportunity as well with the built-in community of fans. Converting that into capital is a win-win. So trying to show all different viewpoints here on the verticals, talking about existing audiences, talking about that community, that user owner that we've mentioned so much on these webinars, as part of the forefront. What about on the tech side, Tim? I know you're a big AI guy. I thought you could kick off this page.
Yeah, well, AI is here to stay. And I think that's going to make its way into content creation, more prospecting tools. And we see a lot of AI for investor outreach. We see a lot of AI for copy creation, AI across the board. Now, I think AI needs to be dealt with a grain of salt. You can't just copy and paste and put it out there, especially when it comes to stats and things of that nature. But I think the general sentiment is the tools here, it can be used. It can help us create more content. It can help us go faster. So why not use the tools responsibly?
Absolutely. And what do you think that means for marketing, Tim? What do you think that means for the 1,434 issuers in 2023 if they were to launch in 2024 and more on top of it? Are we picturing a lot of AI marketing happening? How can we, as an issuer, put ourselves above
I think it can really just help us.
competition?
Yeah, I think it can help us think differently, maybe in ways that we haven't previously thought. And I think we can use that to create more content. So, we, as entrepreneurs, we have limited time and limited resources. So if you can use a piece of content, like, for example, if you and I were starting a flying shoe company, going to ChatGPT and say, hey, can you tell me the 5 reasons why people would want to invest into a flying shoe company? And then it's going to give us 5 reasons why it thinks. And then maybe those 5 reasons are things we'd never thought about for a flying shoe company. Right. So it's that little extra, buddy, if you will, the little AI buddy. I had a conversation yesterday. It's like, if you're deep into ChatGPT and some of these tools, it kind of becomes your pal. And then you're just leaning on it to create, content or come up with new ideas. It's not always the content, but it's the idea generation. It's perspectives. It's certain approaches, or maybe things that you didn't see, stuff on the fringes, and maybe you wouldn't have worded it that way. It can really just help you tell your narrative and tell your story a little better.
And more is more. AI allows for more. You can be creating mass amounts of content to distribute across social media, email, long form content channels. Quality is important. A lot of people do not understand how to fully embrace the knowledge of these tools. and their prompts are subpar. The voice, the format that they're asking for the output, it's just mediocre at best. So it's really a matter of how you use the tools, whether versus whether or not you are using the tools. I still believe the best graphic designers, the best writers are human. I hope I can say that for a longer period of time, but I still believe that. That being said, you get those same individuals set up with these tools, they're going to be pretty powerful because of efficiencies and how they can do more. So you want to think about how other issuers are using AI and set it up to be better. You don't want to think about budget conservation as much as you want to think about maximizing the performance of your campaign. I rarely hear issuers who hit the full 5 million say, but we spent 10% on marketing versus we were able to raise this amount and bring on 5,000 investors and we're taking on more. Don't spend ridiculous amounts, but getting there is more impressive to me than not getting there. Rise in cryptocurrency, growing relevance in equity crowdfunding. As a result, alternative investments pick up. These investments show a rise, and we've seen that in 2020, 2021. We've seen the adverse in 2022, anticipating more of that in 2023, as well as Web3 companies using investment crowdfunding, emerging channels, expansion to platforms like TikTok, something we've talked about for years, testing out some TikTok live campaigns and having that live broadcast get found in the discovery engine and reaching audiences that are not followers of your social page, like you're limited to, let's say Instagram Live, which is also an amazing tool, but it has those limitations to your audience versus everyone. Outreach initiatives are getting more clever. Video AI, you can have outreach saying anything. There are so many neat ways to approach this now at scale. Apollo, other email platforms are amazing. Video content, video content, video content. We've been saying it for years. Ask yourself, why shouldn't this be in video for anything you're creating? And traditional marketing channels, radio, TV, out of home, we've seen for these larger campaigns, there are strong compliance aspects. Make sure you're getting it approved by legal. Tim, you want to fire through these real quick as we get to these last pages?
Yeah, increased investments. So we've slowly seen that number going up from the minimums. So we hope that trend will continue, and we're going to do our part as DNA to do everything in our power to get that trend to continue. We did talk about diversity, so a broader range of backgrounds, women, minorities, you name it. We think more will be entering the space. Repeat investors. So if you made an investment and you had a good time, why not come back? If you already have a wallet or an account set up on one of the major funding portals, or if you want to test out a new funding portal, we think investors that have already caught the bug are just going to stay consistent. And more ambassador programs. There are a lot of investor networks out there that have been out there for years. And we're now, as an industry, just kind of tapping into some of these investor networks. So I think we're going to see more of those networks come into play in 2024.
Yes, yes, and yes. While virtual meetings and events may have kept the world afloat, in-person conferences are back in a big way. We'll be at the Microcap conference next week. Had a blast at investment week with the Startup Starter team. We were at the Reg A conference. A step rise in the Breathe conference, a step rise in bookings at conference centers has been seeing business get back to normal. 75% of organizers believe conferences will become increasingly important, especially in popular vacation destinations. I know it always plays a role. That, and if there's golf available. Reaching out to publishers can also give your startup the extra social proof that investors love. Content promotion, press releases, guest posting, influencer marketing, a lot of the ad programs that these platforms are putting out are direct response oriented. So definitely recommend looking at new approaches to it. We already talked about the rise of savvy investors and using these tools. I think investors at the retail level are going to become more savvy, educated, more selective about their RIC investments, registered investment crowdfunding, and we're just going to see larger whales participating more and more regularly. I could name them individually if it was compliant, but we're seeing them across our deals. We would track data. We're seeing some individuals who participated in over 100 deals. In 2024, you should have that solid marketing strategy. We've been talking about it for years. I do want to emphasize this point before we get to the very completion here, and I know we're at time. Advertising is a primary driver of investing traffic. Ads still work. Since the pixel only shows about a third of conversions, many groups get discouraged and think, hey, I'm seeing a 1x return on my ads. This is silly. Why do I want to be spending to make nothing? Meanwhile, many groups have adopted new ways of tracking ads because that likely means you're getting 3 times what the pixel's showing, a 3x. And while a 3x isn't anything to write home about necessarily in this vertical, in e-commerce it actually is, you can use that to stack and get to higher and higher and higher and higher levels. And as you hit those different milestones, more and more people have that crowd effect sensation. That line around the block becomes visible. So looking at things through the lens of the marketing efficiency ratio is becoming more of a standard in the agency world. If your portal, if your agency partner, your ad platform are not talking about this, they're not educating you correctly. Total marketing spend by total raise amount. MER provides a clearer view of what is truly driving traffic and conversions. We're reporting on both the pixel data and the total spend to total raise amount, can incorporate total service fees in there as a larger metric as well. This will allow you to keep the ads live when you may not think appropriate. And this is how we've seen groups with 2-3x that are scaling aggressively start to see 10-20x even on the pixel data in later weeks, later months, because they just kept pumping into the traffic. They just kept buying investors, and that momentum eventually resonated with the colder audiences. That is the ball game. We invite LinkedIn messages, website messages at any time. We are an open book. We look at it as a duty to educate the industry based on our insights and the sheer volume of campaigns that we've worked on to date. Tim, any final thoughts you want to leave the fans with?
Yeah, there's a lot of capital out there to be raised, and there's a lot of dreams to be actualized. So let's work together on making that happen. That's what we're here for. That's what we're built for.
Cheers. Can't
Cheers.
add anything better than that. Tim, always a pleasure. Thank you,
Yeah.
everybody, for tuning in. We will see you next month. We'll see you the month after that. Let's have a big 2024 for the industry, for your company together.